as the political turmoil in Libya and the Middle East intensifies. Our next guest says it could even spread to Europe, maybe a class warfare. Well, Ari Bergmann is the founder and managing partner of Penso Advisors and ran the derivatives desk at Bankers Trust back in the 1990s when that industry was just starting. Well, he now advises hedge fund managers and institutional investors on how to manage systemic risk in portfolios that amount to about $100 billion in assets. So certainly these are the biggest, the best and the brightest, if you will, of the hedge fund and institutional industry. So Ari, thanks so much for joining us in studio today. Now, not a lot of people have looked at what is happening in Libya or North Africa or the rest of the Middle East and yet turned to Europe as the next place. So explain a little bit of this. You've talked a little bit about a potential class war also beginning in Europe.
I think that this kind of movements never happen in isolation. Once there is, the genie is out of the bottle, it's out. You just can't put it back.
Well, the region, though, when we talk about the Middle East and North Africa, this is a region that always seems to be sort of walking that fine line between political uprising and stability, right? And Europe, we don't necessarily think of that as a place that's directly connected to those events.
I'm not sure if you have the same bloody, demonstrations, but you have political pressure. Look, tomorrow we have the elections in Ireland. How long are the Irish people going to pay for the banks? I mean, you took the bank debt holders, you save them, and you transfer the liabilities from the banks to the people. The people have to suffer austerity, go through trouble for paying the debt of the banks to the people and to the bank, to the holders of the debt outside of the country.
So what will it look like? You think we'll see protesters? What ultimately, will we see something happen like we did in Egypt? I mean, what exactly will protesters be asking for?
I think that will be a political pressure. It's done differently than the Middle East. Let's forget, Europe is not the Middle East. But that feeling of people, that people need to be empowered. It's so easy. You see on television how easy it's to overthrow a government. I think the political pressure will be huge for the bank, for the politicians to really think, should we be paying bondholders of banks and making the people suffer? Perhaps let's rescue the people.
Now, when we look at the Middle East and we see political turmoil in that region, of course, oil is the first thing that is impacted, and then we see that sort of ripple throughout the rest of the asset classes. What happens when this starts in Europe?
I think that the Middle East affects the markets through oil. I think the effect on the markets of Europe is not oil, but it's perhaps bank credit, it's perhaps tightening of credit. Who holds the debt of the banks? And again, it creates a domino effect. Where does it stop?
And then where does it go from there? I mean, we've been seeing this already in Europe. Really, if you look at credit spreads in that region, they have blown out. They may have stabilized somewhat, but where does it go from there? I mean, we have seen this flight to quality trade. The 10-year U.S. Treasury yield has come down quite significantly. We've seen a little bit, it looks as if a trade out of U.S. equities. We've seen a trade back into gold. What else happens?
The question is, do we go back to a recession? Meaning the world is in a very nice path of recovery. The question is, if the banks in Ireland decide unilaterally to renege on the bondholders, which banks hold that paper? How are they going to be affected? How is that going to impact the economy? Meaning, can we have a double dip? Can we have the economy going back into recession?
Now, you're working with a group of investors who has a lot of people focused on these issues and focused on creating models that sort of model these things out or analyze these events out several years from now. What are they most afraid of?
I think that models to plan 7 years ahead, I think is very tough. It's hard enough to plan for the next couple months, forget about the next couple years. I think what you've got to look is at the markets, look at what are the issues out there, what can go wrong, and what can you find to hedge those risks. And it's available out there.
What are they looking at mostly? The cash markets? Are they looking at derivatives to hedge these things? Let's go through some of the asset classes as equities are concerned.
We look specifically at mispriced risk classes. In other words, we want to find the most effective way of buying risk protection where people are not focused yet. If everybody's focusing at an asset class, you can't find protection. It's already too late.
Once the risk is already well known, buying protection is quite expensive. What you want to do is buy the protection when it's cheap before the risk is clearly identified.
Look at oil options. As short as 3 weeks ago, you could have bought the April 125 calls for 7 cents.
Is that story old now? I mean, some are looking at oil at $200, $220.
Just look at the oil options. The same April options that were trading at 7 cents with 3 months to go, today with 3 weeks to go, were trading yesterday at $1. Today they're trading at 70 cents. Too late. The genie is out of the bottle.
So they're not, right, at this point, your advice to clients would necessarily be to add protection at this moment in oil. So then where do you look?
You look for different asset classes where the market has not focused yet. You always have to look into where people are not looking at.
You know, this is one of those moments, though, where I feel like everyone's looking at every asset class. You know, in commodities on a daily basis, we talk about wheat, we talk about soybeans, we talk about cotton, we talk about coffee, we talk about silver, gold, we talk about oil, we talk about interest rates on a daily basis. I mean, rarely, I think, have we had coverage from a business news perspective that has been this comprehensive, and it's because people want to know what's happening across all asset classes. So which aren't they talking about that they should be?
I'm just going to look at the past. 3 weeks ago, okay, the same April options, the 125 calls, were trading at 7 cents. So it was available, it was plentiful, it was extremely cheap. People are not focusing at it. So it's as much as we have, and people look like people are focusing on everything. In my own career, the past 20 years, I've never seen so much mispricing of risk as we see now.
Well, let's talk about Saudi Arabia, getting back specifically to what is happening in Libya. And the big fear, of course, is that this spreads through Saudi Arabia. Now, Saudi Arabia's, you know, the leadership there looks as if they are trying to get ahead of this event. So to what extent is that a big conversation you're having with clients? Are the events in Saudi Arabia on a daily basis?
We are not trying to measure, it's very difficult to measure what will happen with Saudi Arabia specifically, but the entire region is at risk. These kind of movements are never done in isolation. It's the zeitgeist, it's the spirit of the times. The genie is out of the bottle. Everybody's going to try to empower themselves, not only economically, but politically.
Will the Saudi Arabians be able to quell the unrest in the region?
That is the great question. And I don't think we will never know right now, and the situation is so fluid that it can change day by day. You can never predict. You could be right, you could be wrong, but that's not a business. The business is to take investment views and to hedge if you're wrong, because in life you can always be wrong. And to just try to look at the future doesn't work.
All right, Ari, thank you so much for joining us today. Always appreciate your insight. Ari Bergmann, founder of Penso Advisors.